Let's break down XRP, one of the most talked about cryptocurrencies in the world, and explore why it became the center of a major legal battle. To understand why XRP landed in legal hot water, we need to look at both its purpose and how it was sold. XRP is a digital asset created by Ripple Labs, designed to help banks and financial institutions move money across borders quickly and at a fraction of the usual cost. Ripple's vision was simple but ambitious. Make sending money anywhere in the world as easy and instant as sending an email, using blockchain technology to cut out the middlemen. But the SEC, the U.S. Securities and Exchange Commission, saw things differently and raised serious concerns. The SEC's main job is to protect investors and regulate the sale of securities, which are financial assets like stocks and bonds. The agency argued that Ripple was selling XRP to raise money for its business, just like a company might sell shares of stock to investors. According to the SEC, people who bought XRP weren't just using it for payments, they were investing in Ripple, hoping the value of XRP would rise as Ripple's business grew. The problem? Ripple didn't follow the strict rules and disclosure requirements that apply to selling securities in the US. So, in late 2020, the SEC sued Ripple, claiming that its sales of XRP broke federal securities laws and put investors at risk. This lawsuit wasn't just about Ripple or XRP. If the SEC was right, it could mean that many other cryptocurrencies might also be considered securities. That would force crypto exchanges and companies to follow tough new rules, register with regulators, or risk being shut down for operating illegally. The lawsuit quickly became a high-stakes battle, grabbing headlines and sparking fierce debate about the future of crypto in the United States. The entire crypto industry watched closely, knowing that the outcome could set a precedent and reshape the rules for everyone involved in digital assets. Ripple's fight wasn't just about defending one token, it was about the fate of digital assets and innovation in America's financial system. The stakes couldn't have been higher, as the outcome would influence how cryptocurrencies are treated for years to come. The SEC's lawsuit against Ripple kicked off in December 2020, sending shockwaves through the entire cryptocurrency industry. Overnight, the case became one of the most closely watched legal battles in the world of digital assets. The lawsuit specifically targeted Ripple and its top executives, including CEO Brad Garlinghouse and co-founder Chris Larsen, accusing them of violating federal securities laws. The SEC claimed Ripple's $1.3 billion XRP sale was an unregistered securities offering, arguing that investors bought XRP expecting profits from Ripple's efforts. The case dragged on for nearly 5 years, filled with legal twists, heated arguments, and high drama that played out both in courtrooms and across social media. Ripple's defense was clear: XRP is a currency, not a security, and its price is set by the open market, not by the company's actions. They argued that the SEC's approach threatened innovation and the future of blockchain technology in the US. The lawsuit crushed XRP's price. Major US exchanges like Coinbase delisted it, freezing out millions of investors and causing panic throughout the crypto community. The crypto world watched every move, knowing the verdict would set a precedent for all digital assets. News outlets, analysts, and investors speculated endlessly about the possible outcomes. If Ripple lost, countless crypto projects could face disaster, as the SEC could use the ruling to go after other tokens and companies. If Ripple won, it would bring long-awaited legal clarity and spark new innovation, opening the door for more projects to thrive without fear of sudden regulatory crackdowns. The fight was grueling, with Ripple's team working around the clock, but they saw it as a battle for the entire industry's future, not just their own survival. Every legal filing, every court date, was a step toward defining crypto's place in America, as lawyers and regulators debated the very nature of digital assets. The outcome would shape the rules for years to come, influencing how lawmakers and regulators approach crypto for the next generation. The stakes were nothing short of historic, with the future of the entire crypto industry hanging in the balance. The turning point came on July 13, 2023. It was a day that would be remembered in crypto history, as the long-awaited verdict in the Ripple case finally arrived, sending shockwaves through the industry. Judge Analisa Torres delivered a groundbreaking ruling. XRP, when sold to regular people on exchanges, was not considered a security under US law. This distinction was crucial, as it separated everyday crypto trading from the more tightly regulated world of securities. This was a massive win for Ripple, whose future had been hanging in the balance, and a significant blow to the SEC, which had aggressively pursued the case for years. The judge made it clear, retail buyers on exchanges weren't investing in Ripple as a company, they were simply trading tokens, just like they would trade any other digital asset. The ruling clarified a key legal principle. It's not just the asset itself, but the context and manner in which it's sold that determines whether it's a security. This nuance had been missing from previous debates. For the first time, the crypto industry had a legal framework to help distinguish between securities and non-securities. This gave companies and investors much-needed clarity, reducing the uncertainty that had plagued the market. Almost instantly, XRP's price soared, and major exchanges that had previously delisted the token rushed to relist it. The market responded with enthusiasm, and traders celebrated the newfound momentum. Other crypto projects now had a powerful precedent to defend themselves against SEC scrutiny. The decision offered hope to countless startups and developers facing similar legal challenges. The SEC tried to appeal the decision, hoping to overturn the ruling, but the court denied their request, further reinforcing Ripple's victory and the strength of the judge's reasoning. The decision signaled a major shift in the legal landscape for digital assets, suggesting that regulators would need to rethink their approach to crypto enforcement. For the first time, a U.S. court recognized that not all crypto sales are created equal, and that context truly matters in the eyes of the law. The crypto world erupted in celebration, viewing the decision as a major win against regulatory overreach and a step toward fairer treatment for digital assets. Ripple's case instantly became the benchmark for future crypto lawsuits, setting a legal precedent that would shape the industry for years to come. The path to resolution was finally in sight, and the industry could look forward to a more predictable regulatory environment. With this landmark decision, the crypto industry had a new sense of hope and optimism for the future, believing that fairer rules and greater innovation were now within reach. The July 2023 ruling split the case in two. Judge Torres said public exchange sales of XRP weren't securities, but direct sales to institutions were. When Ripple sold XRP to big investors, it was an investment contract, and the SEC won that point. This meant XRP could be a security in one context but not another, a legal first for crypto. The ruling forced projects to rethink how they raise funds. Ripple faced penalties for institutional sales, but the public market was cleared. In August 2024, Ripple was fined $125 million, far less than the SEC wanted. For Ripple, it was a manageable cost for massive legal clarity. The decision gave crypto companies a roadmap. Public sales on exchanges are safer. The industry now had guidance on how to avoid securities violations. Ripple's partial win was a game changer for crypto fundraising. Ripple's legal win sent XRP's price skyrocketing. Before the July 2023 ruling, XRP hovered at 47 cents. After the decision, it doubled in hours, breaking through 93 cents. Each legal victory fueled another rally. By May 2025, XRP hit $2.43, up 200%. The lawsuit had held XRP back for years. Now, clarity unleashed its potential. Investors saw every court win as a green light to buy. The $125 million fine was seen as a bargain, boosting confidence further. Final settlement talks and the return of escrowed funds pushed the price even higher. XRP outperformed Bitcoin and Ethereum during key periods. Long-term holders were finally rewarded for their patience. With legal uncertainty gone, XRP reclaimed its spot as a top digital asset. The rally proved regulatory clarity as rocket fuel for crypto. XRP's legal victories were huge, but the 2024 US presidential election changed the game. A new, crypto-friendly administration replaced the SEC's aggressive stance. Optimism swept the market. Ripple's CEO predicted a new era for crypto. In January 2025, SEC Chair Gary Gensler resigned, clearing the way for a settlement. The new SEC leadership wanted resolution, not endless litigation. This political shift sent XRP soaring past the $1 mark. The US signaled it was open for crypto business again. Investors saw the government pivot as a major buy signal. Ripple's path was finally clear, and the market responded. The combination of legal and political wins created the perfect storm for XRP's rally. With legal and political clouds gone, XRP's market exploded. In November 2024, Robinhood relisted XRP, opening the floodgates for retail investors. The relisting triggered a buying frenzy. XRP's price soared fivefold in a month. On December 2, 2024, XRP hit $2.48, its highest in 6 years. Retail buyers on Robinhood and global exchanges piled in, driven by FOMO. Meanwhile, crypto whales moved huge sums, fueling massive liquidity. XRP outperformed Bitcoin and Ethereum, leading a new altcoin season. As Bitcoin neared $100,000, capital rotated into altcoins with strong narratives. XRP's comeback was complete, setting the stage for even bigger moves. The trading frenzy proved XRP was back in the spotlight. The market was ready for the next chapter. With XRP's legal status clear, the next big question, a spot XRP ETF. A spot ETF lets investors buy XRP exposure on the stock market without holding the crypto. After Bitcoin and Ethereum ETFs, XRP became the top contender. Major firms like Franklin Templeton and WisdomTree filed to launch XRP ETFs. Wall Street's interest signaled XRP was now mainstream and investable. The SEC began reviewing applications, with key decisions expected in 2025. An ETF approval could unleash a wave of institutional money. The market is watching. An ETF could send XRP to new highs. The race for the XRP ETF is the next big milestone. The story is far from over. The SEC settlement in mid-2025 marked a new era for Ripple. Ripple paid a modest $50 million penalty and got $75 million back from escrow. With legal battles over, Ripple could focus on building its business. The company is expanding cross-border payments and developing new products. U.S. legal clarity lets Ripple partner with American banks again. The case set a precedent: secondary market sales aren't securities. This clarity shields other crypto projects and exchanges. The industry can now innovate without fear of sudden crackdowns. Ripple's fight was a win for all of crypto. With an ETF on the horizon, XRP's future looks brighter than ever.